friends, since all we are locked down due to this COVID-19 scenario in our home, and yes, sitting idle, maybe we are not used to or accustomed to work from home, most of us. But yes, we can use this time to get ourselves more trained and more, you see, relevant by learning what has, or rather, what is coming and what is new. So for today, we have with us Debashish Mitra, Central Council member from Eastern region, and he will be speaking on COVID-19 impact on accounts and audit. Friends, as we all know, that due to this scenario which is imposed upon on the entire world, we are facing, you see, everything. March 31st was the closing, which has just yesterday rather closed without being rather ourselves or for anyone to do anything. When we used to be very busy on 31st, and I think this is the first time in the history that we have nothing to do on 31st March. So, this is the impact which COVID-19 has had on all of us. And for this, Debashish will be taking the session for 35 minutes. He'll be speaking 35 minutes. And for question in our session, all of your audio has been kept on mute mode. So if you have any question, Vivek Agarwal, Secretary of ACAE, he will be moderating the session. So any question which is there, you can post on the our chat box. So accordingly, once the Debashish completes this session on COVID-19 impact on audit and accounts, so he will be taking up questions one by one. So if you want to speak directly on the audio mode, so please raise your hand through software only, not physically though. So if time permits, we will definitely allow you to speak. And anyone you see is rather goes out of the meeting again can join in through same link. And if anyone wants to view this video or the session live, we are live on Facebook and YouTube channel. You can definitely go live or rather even watch the audio and the video session after the session. So Vivek, please just introduce and start the session. Your audio is muted.
So I can start off?
Good morning, everyone. We have Debashish Dr. Debashish Mitra, and he is the best person to take us through the COVID impact on accounts and audit. So now I hand over the session to Debashish.
Thank you very much, Vivek, and thank you very much, Jitendra Lohia, President of ACAE. Hearty congratulations to ACAE for having organized a series of programs, online programs. I think this is one of the few study circles or few associations in India which is doing such a fine job in disseminating knowledge, ensuring that even by sitting at home, we are still getting updated. The topic today is COVID-19 and its impact on accounts and audit. The Institute of Chartered Accountants India has got a publication out about 7 to 8 days back on this same topic. The publication was got out in consultation with the Ministry of Corporate Affairs. Since I speak about the Institute of Chartered Accountants of India and being a council member, let me also tell you that whatever I say are my personal views and did not necessarily be the views of the Institute. Before I start off, let me just take you through those of us who are a bit uninitiated on this topic. Let me just take you 5 to 7 minutes time on the basic background. You know, in accounting, we have two different frameworks. One is the AS and other is the Ind AS. Accounting standards was something that was introduced as part of the company's accounting standard rules 2006, way back in 2006. And then we have the Ind AS, which is applicable for certain bigger companies like listed companies, companies having a net worth of 250 crores or more. So this one, it was introduced something in somewhere in 2015. So we presently have two different set of framework as long as accounting is concerned, AS and Ind AS. As long as audit is concerned, we have the auditing standards. Section 143, subsection 10 of the Companies Act, with effect from 1/4/2014, made the auditing standards mandatory. That is, all the auditors are required to follow these auditing standards, which were recommended before that date. Today, the Institute has 46 auditing standards, and the Institute tries its best to see that this auditing is in consonance with the international auditing standards. So when I speak to you, I will be referring to these accounting standards. I will more or less lay more stress on AS because I am also aware that we may not have a lot of people having, in AS, maybe people like Vivek has. So you see, I will talk about AS, but if you have any queries on Indians, you can ask me. Accounting, auditing standards also, I'll have a look at it. 2 or 3 developments in recent times, which I will also take in the next 5 minutes before I go to my main topic. Number one, CARO 2020 has been deferred. It was also the viewpoint of the institute at some point of time that this is, you see, we had to get the guidance note out, and we are working very feverishly to get the guidance note out. But because of this COVID, the CARO has been deferred. Please note, along with the CARO, what was also going to come was Schedule 3 change, because one of the clauses in CARO talks about based on certain ratios, whether the company will, what will be the liquidity position and the solvency position of the company in future. That was one of the clauses in the new CARO. So you see, the government has stated that these ratios that are there will be put in part of Schedule 3. And Schedule 3 change has not come about. When I speak about Schedule 3, let me also tell you that Schedule 3 is basically, it contains formats of the balance sheet and the PL, formats of financial statements. Schedule 3 at the present moment has 3 divisions. Division 1 contains the format of financial statements of non-Ind-AS companies, which is the AS companies. Division 2 contains the formats of Ind-AS companies. And Division 3, which was recently introduced and for which the Institute has also issued a guidance note, it contains the format of financial statements of NBFCs. So this is Schedule 3. When you are preparing a balance sheet of a corporate, you really cannot, turn a blind eye to Schedule 3, Division 1, Division 2, and Division 3, the newly inserted Division 3. And when you are talking about Division 3, also look at the guidance note issued by the Institute. So that's CARO. Please note, there is also a talk about the bank, that what is going to happen to bank audit in this scenario. You see, we are all aware that there was a circular issued by the Reserve Bank of India way back in 2012, which talks about a deadline in completing the audit. Earlier, SEBI, those banks which are listed, they had to complete the audit by 15th of May and submit the report to SEBI. Now, SEBI has extended that date of 15th of May to 30th of June. And consequent to that extension, and because of the COVID, that circular which was issued by the Reserve Bank of India in 2012 has been withdrawn. It only means that, you see, for non-listed companies, whatever the deadlines were given in that circular, those deadlines are no longer there. So consequently, if you have a situation for a listed bank, you have to submit your financial statements now by 30th of June. For a non-listed bank, there is not much of a guidance at the present moment, but they would also expect you to do very quickly. So please note, so that is, that was the significance of the withdrawal of the circular of 2012 that RBI had given. So because of this, today somebody, sent me a mail that he has got the audit from a bank. And the appointment letter says that he has to start the audit on 4th of March. Those of us who are hearing me speak on this, let me tell you, the Institute is taking up the matter with RBI. Nobody needs to start the audit by 4th of March because we cannot, break the lockdown and start a bank audit. So please do not be concerned about this. Nobody needs to start the audit by 4th of March or 5th of March. My own, this thing is this, will start the audit end of April or maybe first week of May. That is my own understanding, not the Institute understanding. That's my own understanding on this. So that is about bank audit. If you have any queries, you can let me know later on. This is for Vivek Agarwal. Vivek, when I had come here at about 10:50, Vivek was telling me what about the financial year and what is going to happen to financial year. Is it going to be extended and what is, day before yesterday night, we had got a circular and so many of us, we thought that the financial year had been extended to 30th of June. Actually, what had happened was this, that was an extension under the Stamp Act. Many of the industry bodies have sought for an extension of financial year from 31st of March to 30th of June. They have raised 2 or 3 main issues. They are saying the whole business cycle will not be completed in 31st of March because of the COVID. And they have also raised this point that, you see, look, how do I go for a physical stock in, verification on 31st of March when I am not there? They have said that how do I get a confirmation? How do I pass entry for my gratuity on 31st of March? Please note that those are the points, and they have sought for extension up till 30th of June. But you see, there is a contrary argument from the government's point of view. They are saying that, look, once I have got a budgeting done, then if I change the year to 30th of June, I have greater difficulties. then they are saying that I have to keep my year in sync with the state governments. So if I change my year to 30th June, then I have a problem because the state government also will have to change the years. Then of course, it's a consequence. For example, Income Tax Act also needs to change. Please note, Niti Aayog, and there was a Acharya committee earlier, which said that the financial year should go up to December. Now, there is a viewpoint that if you're actually going to change the financial year, then make it go up to June, make it go up to December, which the government has said it wants to do. But at the present moment, there is no change in the financial year. We just have to keep our fingers crossed and see how it works. With this words, let me now take you straight to accounting issues on COVID, about 10 to 15 minutes. The first one is AS2, Ind AS 2 inventories. That's the biggest problem. Now, you know the inventories that are valued as on 31st of March are at cost or net realizable value, whichever is lower. Now, with this COVID, the net realizable value is going to go down. So many of the companies are going to get hit because of this is a lower net realizable value. So that is very, very important. That is one hit that all of us will have to consider. There was this issue raised before us that regarding the production overhead. Now, what happens, this may not be a matter of great interest to all of you, but still let me just tell you, when you discuss the production overhead, what happens is this production overhead is based on normal production capacity. Now, with COVID going down, COVID coming, the normal production capacity has gone down because the production has also gone down. So do I have to change? And this production overhead is really fixed based on number of units produced. So say so it will be production overhead allocation will be those of us who have started costing way back in the CA days. The allocation could be 10 rupees per unit production overhead. And that allocation will be dependent on the normal production. Now, if I take into account the actual production that 10 rupees per unit might go up to 15 rupees per unit. So what do I do? So this standard says that, you see, the one that you had taken earlier, that is 10 rupees per unit, that still remains and that should be taken when you value the inventory. And the difference, if any, should be charged to the PL. So please note that those of us who have a problem on the production overhead, that is the way to go. Ind AS 2, AS2. Impairment of assets, Ind AS 36 and AS 28. Now, please note that those of us who are, we are all aware that every year we have to go for impairment tests. And the impairment test also looks into what is the forecast, what's going to be a cash, what is the value of your asset as on the balance sheet date. We have to do that impairment. Many of our assets could be impaired because of COVID. So consequently, impairment test has to be done. And if some provision has to be done for impairment, you have to do it keeping in mind the accounting there. Regarding contingent liabilities, lot of judgment has to be used while making provisions and for ensuring that the contingent liabilities and the provisions are correctly made. Please note, what is a matter of great deal of concern is going concern. It's a matter of concern, and it is the going concern. Going concern, as the auditing standard defines, is a company's ability or an entity's ability to operate normally in the foreseeable future. And the foreseeable future could be at least 12 months from the balance sheet date. For example, for 31/3/2020, the foreseeable future could be up to 31/3/2021 at least. If the company is in a position to operate normally, then you have a going concern going. If you don't have a going concern going, for example, many of us like Kamal Jain and all these, those of us who do insolvency, we have cases where we don't have a going concern situation. And if you don't have a going concern situation, then you really cannot do the accounts normal way. You have to prepare the accounts on realization basis. Please note, it is the company which has to decide whether there is a going concern in operation or whether there is not a going concern. And if the auditor feels that yes, there is an uncertainty regarding going concern, the auditor has to report on that uncertainty in his audit report. This I will take up in a greater detail when I talk about audit. So this is about going concern. Now let me just take you through the other ones which I think are important. CFS, the consolidated financial statements. Those of us who are preparing, the Companies Act makes it mandatory that if you are a holding company, if you have an subsidiary, if you have an associate, if you have a joint venture, then you have to prepare the CFS. CFS, consolidated financial statements. The standard is for Ind AS, it is Ind AS 110. For accounting standard AS, it is AS 21. So you see that aspect. Please note, Ind AS 110 says that the difference in the financial year period should not be more than 3 months between the end of the year of a holding and the subsidiary or an associate. Whereas AS says that this difference should not be more than 6 months. So please take note of this difference. And when you are doing the CFS, please take a note that what is the position on this. So please take a note on this. Property, plant and equipments. India 16, AS 10. Very, very important. Now, please note that you see every year we are supposed to test the useful life and the residual value of our fixed assets, which are now known as property, plant and equipments. So you see, we have to take into account, you see, some assets might not have been utilized. Some assets might be underutilized. Does it create any change in the useful life or the residual value of the asset? So if there is a change in the useful life or the residual value of the assets, this is something which you must note and be effective. This is something which you see you have to discuss with the management and then take a call on the matter. But please note, most of us we refer to Schedule 2, use a formula, back calculate and find out the useful life. But because of the COVID, you have to give a really think that whether to what extent the useful lives have been affected and whether it requires a change. And if the useful life requires a change, the depreciation and everything will require a change. Please note. Then I'm coming to India's one presentation of financial statements. I'm purposefully not going very technical. If you have any queries which are a bit technical in nature, you can ask me. I'll try to answer them. India's one is one India's. We have about 9 carve-outs between India's and IFRS. I'm just veering away a bit. IFRS is there. This is the International Financial Reporting Standards. India's was developed. It is about 98% IFRS. But we have carve-outs. Carve-outs means where we vary or where we deviate from IFRS. One of the carve-outs is regarding this India's one, regarding this loans. IFRS says that if a loan has a precondition, a covenant, a precondition, suppose I have to submit certain statements at the end of every month. And if I don't submit that statement to the bank at the end of every month, then as soon as I stop submitting, or as soon as I stop complying with the requirements, then in that case, what happens is this: I immediately, my term loan that was there, I try to see that term loan, is converted into a current liability. That's what IFRS says. Once I do not comply with a loan covenant, even though the loans are not called back, by the bank, the India says that no, you cannot do that. You can only do that if there is a demand made by the bank for the repay of the loan. Then only the term loan becomes your current liability. Just because you did not make a technical compliance, because of that, your term loan cannot become a current liability. So this is a carve out. And I think the Indian carve out makes a lot of sense, even though IFRS is very strong on this. So if you have a covenant today, which you could not comply. But please note, now all the loan repayment schedule have been extended to 30th of June. So the question of you not complying does not really, I don't think so it will matter much. But if there is a covenant and if you don't comply, then the question will arise that whether that term loan becomes a current liability, keeping in mind India so on. So that is very, very important. I'm coming to borrowing cost. Ind AS 23 and AS 16. Now, borrowing cost, you see, they say that if once you are having a capital project, any loan that you have taken to fund that capital project, the interest on that loan has to be capitalized. That is a basic basic rule of the thumb. Now, it also says that if the capital project that you are doing, if the construction of the project is suspended, then the interest capitalization also needs to be suspended. Please note, if you have a capital project where you have taken the loan and the interest is there and the project construction is suspended, that please note that the interest capitalization also needs to be suspended, keeping in mind the requirement of AS 16 and Ind AS 23. Financial instruments, expected credit loss, Ind AS 109, I will not take them up because these are a bit technical in nature, and I'm aware that I'm running out of time a bit because I think another 10-15 minutes are there in my hand. So, but I will like to take investments, AS 13 investments. When I make investments, I put this as part of my current investments in my balance sheet. Now, you see, AS 13 says that I must take this as face value. Now, if the value of these investments have gone down drastically, I must take note of the drastic reduction in value when I prepare my balance sheets. So that is very, very important. Keep a note. The accounting standard is AS 13 investments. Very, very important. Very, very important accounting standard. Leases, Ind AS 1116 and AS 19. If there is a change in the terms of your lease, or if there is any relaxation on the terms of your lease, if the lease rentals have changed, then you see you have to give effect. So Ind AS 116, new standard, you have to give effect, keeping in mind AS, also AS 19 on leases. Revenue, recognition of revenue, AS 9. You know, I can, if a company feels that there is a reasonable uncertainty of the company recovering dues, the company might postpone that revenue to the next year. If such a thing happens, it is very important that the company makes a disclosure, the grounds on which it has decided to postpone the revenue, the uncertainties because of which it has decided to postpone the revenue needs a disclosure in the notes and accounts of the company. So that is also another issue on Ind AS, AS 9. We are all aware about AS 22 income taxes and also Ind AS 10 about income taxes. Please note, those of us who have deferred tax, we have deferred tax assets, we have created because of virtual certainty of future profits. If the virtual certainty of future profits is in doubt, then that deferred tax provision that you have made needs to be challenged now. So that is something which one has to do. Even the deferred tax liability, which you have done in AS 22, also needs to have a relook. So these are the various pointers that one has on accounting standards. Once when one finalizes the financial statements, keeping in mind the impact of COVID. Now, let me take you through the audit requirements. I will be a bit more detailed on audit because, see, at the institute, we are now saying that the auditing standards must be popularized as much as possible. The future of the profession is, the future is dependent on how much we are compliant with the auditing standards. Now, the first one I would like to take is identifying risk of material misstatements, SA 315. These are the standards. I'm just taking the numbers. You may remember them, you may not remember them. Now, SA 315 says that if there is, suppose, because of COVID, there could be a contractual breach, there could be liquidity and working capital issues. If you have issues like this, you discuss with the management, and then if you feel that that there are issues which require disclosure, ensure that there is disclosure. If the disclosure is not adequate, ensure that there is your auditor's report carries that. So that is very, very important. The issue that has come up and which is now very, very important, valuation of inventories and physical verification. Yesterday was 31st of March. Many of us auditors, we like to be present, even though not necessarily to be present at the time of verification of inventories. None of us could be present. And that is also on the ground why many of the chambers of commerce is seeking an extension of this financial year to 30th June. So they are saying that we are not in a position to be present. Now, what does the institute say? Institute has an auditing standard called SA 501, which is talking about audit evidence. Now, it says that if you could not be present on the date of physical verification, then if there is a perpetual inventory means where the inventory is maintained on a continuous basis. You have a look at the perpetual inventory records to see from the records whether you can go back to the record of 31st of March. That is number one. Number two, the standard also says that please make adopt alternate audit procedures. For example, what are alternate audit procedures? If you have got a stock as on 31st of March, see whether that stock was sold subsequently in the month of April or May. If the stock was sold on that date, find out the value of the stock and see what was the quantity. So that you can somehow or the other, you can see what was that stock was actually there on the 31st of March. Similarly, purchase. Maybe you can have a look at the purchase inventory to see whether that purchase inventory, the purchase that was done because of that inventory, that purchase is there in the stock records or not. So these are the alternate audit procedures that that an auditor will have to follow because he could not be present at the time of physical verification of stocks. So please note, so this is very important, the stocks, the value thereof. I already spoke to you of the value thereof. So this is a very, very important issue. This time when the stocks are, since we could not be present, you have a look at the stock records, do the alternate audit procedures, and ensure that the stocks are valued correctly in compliance with the accounting standards. CFS. Those of us who are lucky enough to do big companies, CFS means as I said, the consolidated financial statements. Now we have a standard called auditing standard called SS 600, which says that in normal circumstances, the holding company auditor, when he is dealing with a audit of a consolidated financial statements, will rely on the audit done in the case of a subsidiary, or in the case of associate, or in the case of joint venture. He will rely on that audit, and he will say that yes, this is my audit, and he will just try to consolidate that. Only in exceptional circumstances, he is required to go and redo an audit or check the audit done by the auditor of a subsidiary company or a associate. On this standard, we are a bit different from ISA 600. That's the international standard. The international standard says that in all cases, the holding company auditor or the CFS auditor must also have a look at the audit carried out by the auditors of subsidiaries. So this is also, area in which we are a bit different from that. It is basically because at the institute we did not adopt ISS 600 because as per the CA Act, one auditor or one chartered accountant cannot judge the competency of another chartered accountant. That is number one. Number two, we cannot look into the working papers. One auditor cannot look into the working papers of another auditor. Because of this kind of restrictions, we have departed from the ISA 600. But if you are auditor of a CFS, please see how the component auditors, that is the auditors of the subsidiaries and the associates have done, have a look at them. So it's very, very important. Going concern, I just told you. And if there is any doubt in the going concern, please go and qualify. Very, very important. It's very, very important that we qualify whenever we have any doubt on the going concern. Very, very important. SA 580, written representation. Please note, as we go ahead this time in the audit, we will try to seek written representation from the management on various issues. For example, on pending litigations, we'll take written representation. On various issues, we'll take written representations. SA 580. But please note, written representation is not the be-all and end-all of audit. It is just one of the tools for audit. You cannot do the audit only based on written representation. Audit is also about professional skepticism. So that professional skepticism that we apply must be there. The written representation is only one of the tools that helps you in carrying out the audit better. So use written representation, take written representation from the management, but always note that written representation is only one of the tools for audit. I am now coming to auditor's report, SS 700, 705, 706. I shall try to complete the next 5 to 7 minutes. Please note, SS 700 SS 700 contains the format of the auditor's report. 705 contains the how do I modify my auditor's report. And 706 talks about how do I use the emphasis of matter. So we are all aware about the format of the auditor's report, which was recently changed. Please note that if when I'm going to modify an auditor's report, I can have a clean report. I can have a qualified report. Qualified means I give a qualification, but at the end of it, I say that the balance sheet the financial statements gives a true and fair view. I can have a qualified report. I can have an adverse report. The adverse report means I say that the balance sheet or the PL does not give a true and fair view. That's a third type of reporting. That's called the adverse report. And the fourth is disclaimer. Disclaimer I can only give if I do not get enough evidence. For example, receivables. SA 505. I am unable to confirm the receivables, and the receivables are in crores. And I am unable to confirm on the receivables. In that case, I can give a disclaimer saying that based on this, I am unable to give an opinion whether the balance sheet gives a true and fair view. So that's called a disclaimer. So please note that you can use either of this, a clean report, a qualified report, an adverse report, or a disclaimer. These are the 4 types of reporting that you can do under SS 705. 706 is more interesting. Suppose you have an issue in the notes on accounts. Say on COVID, you have an issue in the notes on account, which you don't want to qualify, but at the same time you feel that the issue is so important that it requires to be mentioned in the body of your auditor's report. In that case, you can bring it to the body of your auditor's report, which is there in the notes on accounts, and state like this. You see that your language should be reference is made to note number this much of the notes on accounts, which states this, and you write that. At the end, you must write, our report is not qualified in respect of this matter. Please note, you see, this emphasis of matter is really not a qualification. So you see, if you don't want to qualify at the same time, you want to see that, you see, some points are raised, you may bring it in the main body of your report. But let me make it a point. Emphasis of matter is not an alternative to qualification. If you want to qualify, please go ahead and qualify. You cannot, you see, curb your qualification by using an emphasis of matter. That is not the spirit of SS 706. We have SS 701, key audit matters, which should be used, but please note, it is now applicable only for listed companies. For non-listed companies, it is optional. We have SS 720, auditors' responsibilities relating to other information. Now, on this essay, when you are finalizing the audit report, you see the management analysis. You see the risk assessment of the management. Take these into consideration, and then you only finalize the audit report. The last one, and the most important, which the government has been telling us that, you see, you must take care this time, at least this time especially, is fraud. SS 240. Because the feeling is this, that this time with this kind of abnormal situation, the auditors must be very, very careful about the fraud. Now, please note, we have a separate section in the Companies Act on fraud, that is section 143, subsection 12 of the Companies Act. The section says, if the value of the fraud is more than 1 crore, in that case, you are to, within 60 days of the fraud having been detected by you, you have to inform the Government of India using a form called ADT 4. If the value of the fraud is less than 1 crore, then in that case, you inform the management, and the management needs to carry about your observation in the director's report that it has. Please also note, the CARO, irrespective of whatever you see, even if the value of the fraud is less than 1 crore, this fraud has to be reported in your CARO report. And there is also this point that, you see, with the CARO 2020 being applicable from 2020-21, whether CARO 2016 will be applicable for 1920. Let me tell you, maybe the government will come out with a clarification. For 1920, what will be applicable will be CARO 2016. We will not have a vacuum. We will not have a situation where there is no CARO for 1920. So please note, this aspect of fraud is very important. Fraud reporting this time is very important because there are penal consequences for non-reporting of fraud. So this is very important. The institute, way back, about 3 to 4 years back, had issued a guidance note on reporting for fraud under section 143, subsection 12. Have a look at that guidance note. That guidance note could be of great use to you as you go ahead and do the audit. So you see, that is very, very important. And also, have a look at this auditing standard, ASA 240 that we have in our hand. You see, this auditing standard on fraud could be of great use to you. We also have a definition of fraud. Those of us who are thinking that what will be the definition of fraud, we have a definition of fraud laid down under the Companies Act. If I recall correctly, the section could be 447 or 470. I do not say, I think it's 447 only. So the definition of fraud is there in the Companies Act. Have a look at the definition of the fraud. You see, also have a look at the definition of fraud as given in SA 240. And please note, this time the government will be looking at us with with greater care regarding what kind of fraud detection that we did this time. Please note, in the new CARO 2020 that was there, there was a clause that whether, you see, ADT 4 was used by the auditor during the year to report fraud. Thankfully, that CARO has been deferred by a year. We are developing a guidance note on that. And I think as we go ahead this time, the fraud reporting will be of great importance to all of us. I will also state about external confirmations. It's the SA 505, last one, SA 505. If you have a debtor, trade receivables, or if you have a trade payable, please see that you have got some kind of confirmation. I know many of us, we don't have confirmations. Then at least have alternate audit procedures. That is, if you have a debtor of 31st March 2020, then see when was this amount subsequently received, or was this amount not received at all subsequently? If you have a creditor or trade payable as on 31st of March 2020, have a look when was it paid subsequently, or was it not paid at all? If you have a debtor which is more than 3 years old, have a look as to whether a provision for that bad debts has to be created, whether the debtor is really good or not really good. So these are the issues that you have to do. SA 505 on trade receivables and external confirmations is going to be very, very important this time as we go ahead and do the audit. With these words, I thank all of you for the very patient hearing. I hope you have found the deliberation useful, and I am now open to questions. Thank you very much.
Friends,
thank you, Debashish Da.
Vivek, can we take the questions which are there in our chat box?
There's a first question from Gaurav Moore. Gaurav, continue with the question.
Yeah, good morning, everyone. This is Gaurav, and I'd like to thank everyone for the deliberation that ICA has taken up for this digital.
I'm sorry, I cannot hear you, people. I'm sorry, I cannot hear you.
Hello.
I'm sorry, I cannot hear you. I'm sorry. If you can hear me, I'm sorry, I cannot hear you.
Hello. Can you hear me?
Yeah, Gaurav, continue. Yeah, Gaurav, continue.
I'm sorry, I cannot hear you. Vivek, I really cannot hear you. I'm sorry.
Okay, Gaurav, you can just type in your question. Yeah, I can hear you. I can hear you.
Debashish, can you hear me?
Yes. Now, yes. Now we can start. I think I can hear you now, Jitu.
Okay.
Debashish,
yeah, please.
Jitu, please speak a bit louder.
Debashish, can you hear us? Hello.
I am again sorry. I cannot really hear you. I'm again sorry.
Okay, I'm just
Vivek, please take a question. Vivek, please take a question on his behalf.
Vivek ji, like I have a small query relating to fixed assets verification. Like there is a specific requirement, like whether management has taken steps to do the physical verification or not. Like if suppose they are not able to give us any proper documentation whether physical verification has been done, in that case, what specific note that needs to be given in CARO, and any specific requirement relating to COVID note that needs to be given in notes to accounts can please be highlighted, please.
Okay.
Right. I have, although I could hear you only very little, but whatever I have heard, I think the question is that if no physical verification could be done, and what happens in that case?
Correct.
Or so first of all, the first thing is, could the physical verification be done, say, on 30th of April for 31st of March? Could the physical verification be done on 30th of April, and could I back calculate and see that this thing? That is number one. Right? Please note, it is not only reporting in the main audit report, but also reporting in CARO. CARO also has this thing about physical verification, whether physical verification has been done at reasonable intervals and what has happened to that. So if physical verification has not been done at all, or if the physical has not been done at all, in that case, I would certainly suggest that you qualify your report. Because in that case, the quantity of stock is unverifiable, and then the truth and fairness of the financial statements is under test. So I would certainly suggest that you first of all go to CARO and qualify that, and if required, come back to the main report and qualify it. Please, I would like to repeat here, please note that there is no specific guidance that as to whether a qualification in CARO also automatically results in qualification in the main report. But in this case, if the inventory has not been physically verified, I would like to think that you go for both the reports. And then, since you're talking about verification, I would also like to find out what was the valuation of inventories, cost or net realizable value, whatever is lower, to what extent that was done. You have a look at it.
Okay, sir, one more question is there. What about if physical verification of fixed asset is not done? If physical verification of fixed asset is not done, what steps has to be taken by the auditor and how it has to be reported?
Again, I say whatever I could hear you, Vivek, I think you are talking about physical verification of fixed assets,
Yeah.
right? Please note, there is no requirement as such that the physical verification of fixed assets, the CARO says that whether the physical verification of fixed assets have been done at reasonable intervals. So reasonable intervals could be once in 2 years also. That is what the institute's guidance note says. So there is no requirement as such that you have to do it on 31st of March, unlike in the case of inventories, right? So you see, if that verification is not done, and if you feel that the last verification was adequate, that the interval was adequate, then accordingly you may report.
Okay, our next question is from Anup Sanghai ji. Anup ji, continue with the question.
No, I don't have any question.
Okay, there is no other question in the chat. Jitu bhaiya, take over.
Friends, first of all, I would like to thank Debashish for his wonderful deliberation. Debashish, I mean, we cannot
Yeah, I'm
see
just
you
trying
actually.
to catch you. Jitu, please carry on. I'm putting my ear to the phone and trying to understand what you are saying.
So I think you can
Jitu, tell me.
you can increase your volume instead of rather taking your phone to the phone. Friends, let us
Increase
all
in value
thank
of what, Jitu?
volume.
Oh, volume. You are saying volume.
Yeah, volume of your speaker phone.
My volumes are full.
Okay, fine enough. Friends,
My volumes are totally full.
okay. Friends, we let us all thank Debashish for his wonderful deliberation on COVID-19. It is, you see, very much required in this testing time that we must know that how to go forward with the accounts and audit in the lockdown scenario. And yes, Debashish has very wonderfully rather explained us that what accounting standard says about every aspect which we are right now facing. Yes, he has also said that there might be more notification to this aspect, which which the
Jitu,
government of India.
I have heard you on this. I think yours is more of an observation than a question.
It's a closing
No,
remark,
no,
sir.
I think yours is more of an observation than a question, Jitu.
No, I know actually. Since there was no question, we are trying to conclude on this. We conclude the session.
Okay, fine. Thank you very much. Thank you.
So, friends, before we we hand over this session to Vivek for the final conclusion, please, I would like to know like you all to know the next session we are having up to Saturday. Tomorrow we are having a session on direct taxes, wherein the official from indirect taxes will be coming, and he will be ready to take your question and your queries on the recent circular which has been there relating to the GST. So we also have with us in the session CA Jayesh Gogri, he is from Mumbai, and then Tarun Kumar Gupta, our convener, will be coordinating this whole session. And then, friends, you have also been looking to the screen, wherein on 3rd April, we'll be having a special session with Dr. Piyush Saxena, who is from Mumbai, and he is a very renowned book writer. He also have 2-3 books written, and his session is being regularly beamed on GeoTalk. And he has devised a very unique therapy which is called cleansing therapy and cleansing your organ through a natural way. And friends, let me tell you, I have also done it once, and it's very effective. And you can effectively know that how your liver is being cleaned and how your other organs is being cleaned. So I would request all the participants over here to please do join, and I trust it will be a very effective session. And then on 4th April, Friday, at same time, 11 a.m., we have a session on singing in the sinking ship. Friends, this is definitely, you see, as the topic suggests, is a very offbeat topic. And this topic would be taken up by Advocate Saleh Seth. Like you, I also do not know much about this topic and what he would be deliberating, but let me tell you, it could be going to be a very interesting topic. And then, friends, just now we have finalized one more topic, which will be on 3rd April, we are having session on 11 a.m. And then again, we will be having a separate session that is at 5:30 p.m. And for this session, we will have, let me show you, if I have a presentation for this, just hold on. We'll circulate it. We'll circulate it. It is about investing in the tough times, and for this, we will be having with us the panelists, two renowned panelists who are regularly speaking on CNBC, Ask and ET now. One is Deepen Seth. He is heading institutional research at HDFC, and second we have the panelist which we have is Mr. Kailash. Uh, Mr. Kailash, he is heading L&T Mutual Fund. They will both be speaking on investment and more aspect of investment, seeing the current times. And Mr. Keshav Loyalka, who is CFO L&T Finance, he will be joining us as a moderator to the session. So please do join us. The session will be 5:30. I think in this scenario, I mean, all we can do is we can take this scenario as an opportunity for investment in various instruments. And in the guidance of the experts from the field, definitely we can make a good investment. And so that you see, when we cannot repent in the future when this lockdown will end, that we have not invested when it was required. So with this, Vivek, over to you, and please conclude this session, and then we will end.
Okay, thank you, Jituji. Thank you, Debashish da, for the awesome session. I am unmuting all of you. You can have a big round of applause for Debashish da, please.